Hey everyone, it's Dan with the Trading Hawk, and I'm back with another daily recap. And in today's recap, I want to go over how I get my zones and put them in the correct context, and how I'm able to execute on that idea. So coming into the day, I told the guys that 37 to 42 was our first resistance zone, and if you look at the TPO charts, I got that zone by going to the weekly. You can see that from last week and the week prior to last week, we had excess and some nice volume tapering off in this 37 to 42 zone, with the excess from last week from 42 to just about 44.5. So this was an area that I was looking to get short if the internals weren't too strong, and if the delta wasn't crazy buying above this area. If we had a similar scenario like last week, where the buying wasn't too strong and we had sellers coming to the market at these areas, I'd be interested in getting short for a pullback down into the POC around mid-20s, or even the first support, which was at 18 to 20. So let's get right into the charts. If you look at the delta chart, that was what I was mainly looking at here. Well, first I'll start here. Okay, so first of all, when we opened up today, we went from 32s up to 39, and we did that. That's over 7 points, and the advanced decline, if you know anything about advanced decline, for every 1 ES point, the advanced decline moves around anywhere from 30 to 100 points depending on the day, and the AD only moved up 150 off its lows with a 7-point move on ES. So the buying here wasn't too strong, and the breadth wasn't too amazing either. And if you look at the delta, that was what I was mostly looking at. Off the open at 630, as we're moving higher, the sellers are aggressively hitting it on downticks versus on upticks. There's nobody there buying the market when it's ticking up, but when it's ticking down, the sellers are being really aggressive. So this was my confirmation that told me that the sellers are being active and aggressive at these levels again. So I got short at 38 with it was a bit of a wide stop. It was a 5-point stop, but the target was back down to the first support zone at 18 to 20 right here. And the reason for this target was because if you look at even if you look at the candlestick charts, it's a pretty obvious zone. It was yesterday in the Globex low. It was the Globex low, and it was yesterday's inflection point, 18 to 20. So that was my first target. Well, my first target was the POC on the weekly at 25, but my main target was at 20 to 18. And then I actually, once it came back down here, I flipped long at 21. I was expecting a move back up into 28 to 29 because advanced decline was actually pretty strong at this point. If you look at 727, we're plus on the AD, we're plus 200, and if you look at yesterday's close was at 25. So when we're at 29.20, when we're 5 points below the close and the advanced decline is still plus 200, that was indicating of strength. So I got long at 21, but I immediately saw this, okay? Once I got long, I saw the tick on the bounce from 20 to 22 at 728 and 729. The tick was actually holding below zero, and the highest I actually got was negative 200. So once I saw this, I'm like, okay, this is a very obvious level. If there's sellers active at this level, and the buyers can't even get tick above zero at support, I didn't want to be involved anymore. So I actually took a -1 on this one. I took -1 point because I knew that if they're hitting this level, then they're most likely going to go for the 18 snap to trigger the stops and get liquidity. Because if you're a big boy and you're able to deploy lots of capital into the market, when we're just 2 points below a key level, like if you look at the bigger picture, I mean, if they were able to get this below 18, they would trigger everybody stops who got long in this zone here, within 18 to the 40 area. Whoever got long here and was a day time frame player or a short term swing trader, they most likely have their stops under 18, and the big boys know that. So when you see something like this at the 20 zone with negative tick, I mean, you already know that they're gonna go and snap the support and watch their stops. It's just obvious. Like, if you can't even bounce, if you can't even get the tick positive on a 2-point bounce at support after coming down like 19 points off the highs, that's a big red flag that we're not gonna bounce anywhere, and they're gonna go for the stops. So I got out for a 1-point loss, but it was nothing compared to the winner. And then knowing that all of these people who may have been long with their stops below 18, we got the potential for a wash could have been anywhere from 7 to 15 points. In this case, we had our next support zone at 29.06 to 04s, and how I got this zone was, if you go back on the TPO charts, you can see that from, I believe it was Tuesday. Yeah, if you look at Tuesday, it was going to be the Tuesday value area low and also the JLM low, so this was an inflection point. So we knew that the next level, the last chance for buyers, was going to be at 29.04 to 06 at the value area low, and this also coincided with the Globex POC, where we broke out from a few days ago. So this was a nice inflection point with the value area low being here in the JLM low at 29.04.25. That was actually the exact low right here in C period. So I got long at 29.06 with my stop 1 point below the value area low. If we started to accept trade down in this M period low right here into this excess, we're going to go for the lows and snap, because now you have everybody stuck at these bad prices in this bad position, and now we're approaching the Tuesday low, and there's no real support or any structure below us. Until you get to this M period high where we broke out from the Globex at 28.94.5, and the value area high at 28.92.5. So the next support zone was going to be at 28.94.5 and 28.92.5 within this area. If we snap this M low at 2900.25, so I wanted to be completely out of the trade alongside if it started to do trade within this area, and if we start to hold below JLM, I wanted to be out the trade. So I had a pretty aggressive target too. I had a target of 17 back up into a retest of the first support zone, which could now act as resistance, because now you have people who were buying against the prior day's low and are now flushed out, and this may have some sellers who want to self break even. So I got filled at 817 on this bar right here. I got plus 11 on the first scale out, and I think I was holding the next piece. I didn't go short though, because of just the context of how much we sold off from the high. But I was holding the next piece just in case we came back up into mid 20s into the prior day's POC, and then I was going to flip short at 32 to 35 area, the 78.6% retracement from the breakdown. So I actually got I think I took it off right here though. I took off the position at 13.5 once we came back down and snapped this 14 after rejecting. I thought it was going to come back down and retest the first support zone, so I actually took it off at 13.5 over here. I mean, obviously in hindsight that was the bad move, but I mean, I locked in just over 3 R, so I don't really care. You know, it's not a big deal to me. I believe it was 2.5 R. And then if you look on Twitter, I actually said, at 10:35 a.m. I said the only trade worth taking at this point is a short at the 78% at the 78.6% retracement, where the breakdown started from around 32s with a 3-point stop over 35s for a pullback down to mid 20s near halfback / VWAP, looking for plus 2R on that setup. And what happened was, I was looking at this, and the 78. I can't even say this word today. It's so weird. The 78.6% retracement was it coincided with the 32 breakdown right here. So that was a nice area to go short if we came back up into it, expecting the sellers to be active here again with a stop over at this point over 35. So it would have been a 3-point stop with a target of 6 to 8 points back into the mid 20s and VWAP and halfback. Unfortunately, though, I wasn't able to hop on board and get this trade because we already came up 1-2 times prior to coming into it, and at this point in time, there was less than 15 minutes left in the day, and I don't like to fade the market in the last half an hour because we've seen sometimes in the last half an hour the market can just go super directional, and if anyone trying to fade it just gets demolished. So when you already go up 1-2 times near it and already pull back, like there's less sellers now active, and you might even have caught some shorts that can potentially even push it over. So it just lowers the odds the third time coming back up into it. So that's why I skipped this trade. Obviously, in hindsight, it was a sweet trade, but I just wasn't able to get on board because the odds were just a bit lower for me versus if it came up the first or second time. But I know a few guys in the room got this for plus 2R, and one guy got this for plus 4R. So that was a really sweet trade for those who caught this, but I just wasn't able to catch it because of the things I just said, and that was my day. If you guys like this video, please leave a like, and I'll do these every day. I'm already getting into a habit of doing these every single day. I'm getting used to this now. I can do these more often, to be honest. Just leave some likes and I'll start doing them more often. Thank you, and I wish you all a wonderful night.